I am the owner of NIT CPAs, and we are the CPA firm for real estate professionals because we help our clients save thousands in tax, committing to saving 10 business owners $35,000 or more in taxes for 2025. If you're paying a lot in taxes, you're a business owner, you're a real estate professional, agent, or a broker, book a call, let's chat, help me get to my goal. I'd love to help you and drive some results for you. Today's video, we are going to cover how and when to use the Section 179 depreciation deduction. And then we're also going to go through a client case study for a client that we're actually performing this for the 2024 tax year. Speaking of the 2024 tax season, we're no longer accepting new clients for 2024 tax preparation. Our client roster is full. So, if you need help with 2024 tax prep, we're not going to be able to help you out. But if you want a proactive CPA, you want to do planning in 2025, and you want to lower your tax bill for 2025 tax season, book a call, let's meet, and let's make that happen for you, because good tax savings only come from proactive tax planning. We gotta get started now so we can put the things in place to save you the money that you want to save for 2025. First things first, what is the Section 179 deduction? What this does is it allows business owners to deduct the full cost of qualifying assets in the year of which they're purchased. For agents, this is generally going to be vehicles, right? It's got to be qualifying. You can look up the rules on that. But normally you buy a vehicle for 50 grand, useful life in the terms of the IRS is 5 years. Therefore, you're going to get a $10,000 expense deduction for the next 5 years. What the Section 179 deduction allows you to do is it allows you to take that full $50,000 deduction right in that first year of which you purchased it. And really, it's there to incentivize business owners to, reinvest their money back into their business, right? And how does the IRS do that? By incentivizing tax deductions to business owners. So this is obviously a great opportunity for tax planning. When should you use the Section 179 deduction? Well, first things first, if cash flow is an issue and you need money, or you're going to have trouble paying your tax bill in April, you're probably going to use the 179 deduction, assuming that you purchased the vehicle in 2024 and it qualifies. You're probably going to use it because you need the money now, and it is what it is. It might not be the best from a planning perspective because you're probably in a lower income tax bracket. But if you need the money, you're probably going to go ahead and use the Section 179 deduction for this year. If your cash flow is stable, this is an area where we definitely want to be strategic. Okay, so one of the things that comes to mind is your tax bracket, right? So you have if you're a single filer, you have two big tax bracket jumps. When you start making over $48,000, you jump from a 12% tax bracket to 22%, right? So a 10% jump. And then when you start making over $197,000, you're jumping from the 24% tax bracket up into the 32% tax bracket. So, if you made $150,000 in 2020, say in 2025, you're going to make $150,000. But in 2026, you're expecting to be, making 200 plus, which happens a lot for realtors, right? Like you can once you start, getting into the network, you start getting all these referrals, like your income can go up significantly year over year. So if you're expecting that kind of jump, you might not want to do the Section 179 here in 2025 because next year you're going to be jumping into that 32% tax bracket, right? I'd rather you get that tax deduction in the year of which you're in the 32% tax bracket than get that tax deduction when you're down into the 24 and 22%, especially if you're in the low 22%, because a portion of that deduction will be at the 22% tax savings. And then the rest of it's going to be in that 12%, right? So that's not a very good move. You'd rather wait until you're in those higher earning years where you're gonna save more in taxes before you make this type of move. Alternatively though, right, like you can't always plan around when you're gonna buy a vehicle. If you need a vehicle, you need a vehicle. There's nothing you can do about it. But it all comes down to planning. What are you going to do with the tax savings? Are you going to reinvest it in the business? Are you just going to go blow it? Are you going to go buy a bigger house, right? Because time value of money would say, hey, let's do the Section 179 as fast as we can because we're going to be able to recoup our funds, and now we can invest it into lead generation. Maybe it'll free up some funds that we can bring on a team member, right? But if you're just going to spend that money and blow it, I would say don't do the 179, the section 179 depreciation deduction. Let's just depreciate it over the next 5 years because you're going to make more next year and hopefully more the year after that. And I'd rather get that $10,000 deduction in those higher earning years than take all $50,000 in a lower tax bracket. So, quick client case study on this. So, I don't know, it's probably 4 weeks ago now, early in January of 2025. Had a realtor come to my team. She paid for a consultation for her 2024 tax preparation. She bought a vehicle in our meetings with her. She bought a vehicle in 2024 for 50 grand, qualified for Section 179. So just did some further digging with her. So she made about 100K net income from being a realtor. And then she also had kind of like a part-time W-2. But in talking with her, she had no plans to go in full time as an agent. She liked the flexibility of being an agent. She liked the supplemental income that it provided, but she in no means was trying to grow her business of being an agent. So after that discussion with her, she's already in the 22-24% mixed tax bracket. The entire Section 179 deduction is going to be in the 20%, and she's not planning to make over 200,000 next year, the year after. This is a situation where we're going to go ahead and use the Section 179 deduction. And this one move, right? So she's in the 20, we have it in our tax system. We're about to file her tax return. This one move saved her $20,000 in taxes. So it's really powerful. It's just a planning opportunity though. You don't want to be too quick to jump on these tax saving strategies because it could bite you in the future, right? If you don't, I mean, how long are you going to hold on to this vehicle for? If it's 2 years, you're going to sell it in 2 years and then have to pay depreciation recapture on all that accelerated depreciation. So it's a good tax planning opportunity. It gets a lot of buzz on the internet, so I just wanted to come on here, share some information about it. And then also, I guess kind of the last situation in which my team uses the Section 179 is if we have a client come to us, say January of 2025, 2024 is over, right? There's no planning that can be done. We've already put that year behind us. There's nothing we can do about it. Even if they're in the lower tax bracket, we still might do the Section 179 because it's going to save them taxes this year. And if they're telling us, hey, we're going to come on as a monthly client and we're going to do proactive tax planning and execution throughout the year, we know we're going to be able to save them money in taxes above and beyond just this depreciation play. So in that situation, hey, let's just save the taxes from last year, do the Section 179 deduction, and then next year and going forward, we're going to be able to save you more in taxes than you would have been able to otherwise. So that's all I had for you today. If you're interested in working with us, please be sure to book a call. We'd love to help you. And like I said, if you're a high income earner, you're paying a lot of money in taxes, committing to the goal of saving 10 business owners over 35,000 in taxes this year, please give me a call. I'd love to help. But yeah, have a great week, everyone. Bye.